Happy Friday, everybody. Good afternoon to all you magnificent melon heads. It's 3:15 p.m. Eastern time on Friday. It means it's my favorite time of the week, my weekly wrap-up live stream where I get to talk all matters finance and economics with you wonderful people, unbound by the constraints of time. We run a little long on Fridays, but you know what? We do it once a week, so sue me. And we have got a special show today. We got a good one because I was doing a live stream this morning. Travis over at Real Estate Mindset was nice enough to host me on his live stream this morning, and we were talking about a couple of different things, and he came up with some information about short-term rentals, STRs. And when we're talking about STRs, I want you to think Airbnb. I want you to think Verbos, people buying houses so they can rent them out for a day or two at a time. And I've always known that short-term rentals were playing a role in the housing market. I've always known that there might be a contribution to a potential housing correction caused by Airbnbs. I know there was a lot of rampant speculation in Airbnbs. I always knew that was going on. And I've heard about the Airbnb bust. I've seen a lot of that on Twitter. There's a girl on Twitter named Amy Nixon who's done a fantastic job covering the Airbnb bust. I'm pretty sure she coined the phrase. I've always known it was out there, but I never quite comprehended just how big a deal it was until Travis over at Real Estate Mindset showed me some of the numbers on that live stream today, and I was just blown away. The scope of it, guys, it's huge. I've always known it was there, but it's massive. There are so many houses have been bought for this purpose. And it is a massive contribution to this housing shortage. And there are a few housing bulls out there still, a couple of guys who have been saying we can't have a housing crash, we can't have a housing correction, not until we get new supply because we have a housing shortage. And to their credit, those guys have been right. They have been absolutely correct for the last 2 or 3 years. A lot of channels, self-included, have been saying homes are overvalued and that the prices need to come down. They need to be affordable, and yet the prices haven't come down. Now, the number of sales has come down, but the prices haven't. The housing market's very illiquid, but still prices are even creeping up in most markets. But that could be about to change because one by one, cities across America are passing short-term rental bans, or they're passing requirements that short-term rentals register or get a permit with the city. And then, of course, that's, in a sense, an outright ban because they limit the number of permits that they issue. So all of these short-term rentals are now basically illegal hotels. But the listings are still on Airbnb. They're still on Vrbo, which means these houses, one by one, they're going to be knocked out of this short-term rental market, and they're going to have to go somewhere else to find cash flow, probably into the long-term rental market. Okay, I can't rent it out overnight. I'll rent it out for a year then. Well, that's going to add new supply into the long-term rental market. That's going to suppress long-term rental values, which means a lot of these speculators who bought homes thinking they'll rent them out and be landlords and make a lot of money, well, if the rents start going down, they're going to be losing money. Think about BlackRock, Blackstone. Think about all the institutional money that has piled into single-family homes over the last few years. Remember, that was all the rage in 2021 when the Fed was going burr and the stimmies were flowing? Well, what happens when all these Airbnbs now start competing with those for long-term rentals? Rental prices would collapse. Or let's say the Airbnb owners just throw in the towel entirely and say, you know what, I'm out, and they put the homes up for sale. Well, in an illiquid market with no buyers, the prices collapse. And I got my buddy Travis is here with us today, and he's going to show us some of these numbers. Guys, you don't want to miss this. These numbers will blow you away. The size of the problem, I knew it was there. A lot of people have been talking about it. But the quantity of homes that are involved here, you have to see it to believe it. So we're going to shrink my big melon of a head and bring in my buddy Travis from Real Estate Mindset. Travis, how you doing today, bud?
I am fantastic, Jack. Happy Friday, man, and thank you for letting me on today. I'm looking forward to shining a lot of light on the whole STR crisis that's going on right now.
Yeah, STR crisis, that's pretty good because maybe it's not a crisis yet because they just passed the ban. You know, and like this morning on your channel, we looked at Dallas. Dallas passed the ban, and there's still thousands of these things listed, which means they're illegal hotels. And one by one, they're going to start being taken down because The zoning officer is going to go write a ticket. And then if he writes a ticket in one neighborhood, everybody else on that street or in that neighborhood is going to pull down their Airbnbs or their STRs when he does that. So they're going to start shoving these houses into the markets. And Travis he's done some DD for us. He showed me his notes. He's got a lot of notes here. So I'll tell you what, Real Estate Mindset always brings receipts. When he shows up, he brings charts, he brings numbers, he brings sources. So he's got some great stuff for us today. But first, we're going to shrink us. We're going to go through markets real quick, and then we're going to get to the short-term rentals because there's a lot going on today. First things first, something's up in the uranium market. I've had a couple of you guys have asked me questions about uranium, and admittedly, it's kind of a blind spot for this channel. I don't follow uranium that closely, so I can't tell you what's going on right now, but something's up in uranium. Check out the uranium ETF, up 3.85% today at 26.85. And it's not just the ETF. You've got Uranium Energy Corp, UEC. That's one of the big uranium stocks, up 5.88%. So there is movements in the uranium space today. And I couldn't tell you exactly what's going on there, but I know I got a lot of uranium bulls following this channel. So congratulations to you, uranium bulls. Now let's get into the rest of the market as a whole. Now, we talked in the morning live stream today about how for the last 2 days, the markets, the indexes closed at the low of the day. And how that was kind of a deviation from what we've seen in recent weeks. In recent weeks, we usually see a big move at the open, whether it's up or down, and then that move fades across the course of the trading day. We didn't see that Wednesday and Thursday after the Fed. We saw the market head lower and keep heading lower all day long to close at the low of the day. Now, we opened up big this morning, and I was saying on a morning live stream, how we close is going to be so important. Will this rally fade? And if the rally fades, then look out below. Or are we going to have some staying power? Is the market going to go up and stay up? Well, the market did go up. It didn't stay up. It came back down, but now it went back up again. So the last few minutes today, the last 40 minutes or so of trading, they're going to be pretty interesting. We'll keep an eye on this. We'll revisit the indexes. But right now, the market isn't quite sure where it wants to go. The S&P is up 13 points or 0.3%. We've got the Dow is up 31 points or 0.09%, 34,102 on the Dow. NASDAQ leading the way higher, up a full 0.5%, 64 points to the upside, 13,287 for the NASDAQ. We have got the U.S. dollar is still higher on the day. The Dixie's at 105.55. That's up 19 basis points. Heck of a run for the Dixie this week. We've been in 105 territory pretty much the whole week. The dollar is getting more scarce. The dollar is getting stronger versus other global currencies. Looking over at the bond market, we have got a pop-up window that won't go away. But besides that, we got the 30-year Treasury, 4.52%. That's down 2 basis points or 0.5%. The 10 years yielding 4.44, down 4 basis points. Not terribly surprised to see yields on the long end of the curve lower today. It's had a heck of a run all week. Nothing goes up forever. The yields have finally taken a break, but still 4.44. Big run for bond yields this week off of that Fed FOMC press conference and Powell basically saying higher for longer. We've also got the what's going on here? Well, wait, we got something going on at investing.com. The 2 years yielding 5.1. That's also down 4 basis points, and the 1 month at 5.39%, where it is being held by the Fed's overnight interest rate. All right, moving on. We have got the commodities board right now. December gold futures trading at $19.44. That's up $5 today. Silver trading $23.82, up 13 cents. Gold and silver had a pretty good week considering what bond yields did this week. Typically, yields heading higher sends gold and silver lower. They held up pretty well during this week. Crude oil, $90.45 for November oil futures. That's West Texas Intermediate, up 83 cents or 0.93%. The bull run in oil continues. And now it is time. We are going to get rid of my screen, and I am going to give the conch over to my man Travis here. We're sharing your screen, Travis. Let me know what you want me to put up on screen and when. But tell us a little bit about what you have found in these short-term rentals, because there's a lot going on there. And
yes.
Well, take it away, brother.
Okay, man. Well, I have a lot to say, and I'm going to say it as clearly as possible. Big shout out to Johnny Fly. I'm not sure if he's in the comments. Love that guy. But I want to tell you guys a story about the housing market and as far as the prices. So I'm going to make this story, Jack, very, very simple. And I'm going to leave out things like PE ratio. I'm going to leave out things like payment to income ratio, massive equity run up. And I'm going to simplify this because a lot of the bulls on the housing market want to keep it simple. So we're going to keep it simple and we're going to talk about supply and demand. Keep it simple, right? Now, obviously, supply and demand affects prices. Now, I think we can all agree that what happened in 2023 is prices sustained, house prices I'm speaking about, sustained because there was just enough buying demand versus supply, okay, or the lack thereof supply. But I think it's important to ask what happens when we get the supply. I think most of us can agree that if supply goes up substantially, okay, not just a little bit here and there, but if supply goes up, I think we can all agree that there will be some type of price event, right? House prices will probably go down the more that inventory goes up. And I would also argue that this is, only way we can even sustain where we're at right now is that historically low inventory. Okay. Now, what I want to do is basically, Jack, after being in real estate, really analyzing this house market crash and the PE ratios and the run up and all that for the last year and a half, a common thing I get from realtors, a common thing I get from bullish people or investors is, where are you going to get the inventory, right? Where's the forced selling going to come from? So that's what the story is going to consist of. And I'm going to leave out really important things like institutional investors, right? Becoming net sellers. So we're actually getting inventory now from institutional investors. That's a double whammy because it's also the demand is also gone. I'm going to leave out new construction, which I believe new construction, I don't know. I believe it's going to lead. I think it's a leading catalyst to price decline, but I'm going to leave it out. We're not going to talk about new construction. We're not going to talk about consumers being crippled, even though we have surveys from Zillow saying that the active listings right now, 10% are listed, 10% of active homes are listed because people have to go back to work. 20% are listed because people can no longer afford to be a homeowner. But I'm going to leave that out, right? I'm going to leave that out. And I'm going to leave out talking about the long-term rental market, even though we are this close to deflation. We have disinflation right now. I'm talking about deflation. I'm going to leave all of that out, right? And I'm only going to talk about STRs. And anyone that's watching, I want anyone that's watching and listening to this, stop saying Airbnb. Let's replace Airbnb with STR, which stands for short-term rentals. Now, short-term rentals have to do with both Airbnb and VRBO. So when we say STR, we actually encompass a lot of additional platforms that have obviously short-term rentals. Now, what I want to do is basically talk about the banning of STRs. A lot of people were talking about the lack of profit, vacancy rate, but I think the really important thing to understand here is, well, number one, we don't even need that much inventory. But number two, we really want to focus on the metro areas that have already banned Airbnb. Now, it started, I think, in Southern California or somewhere in California. And, basically that law led to Airbnb having to register. Okay. Now from there, it's probably a precedent, blah, 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 blah. But what I'm really trying to get to is New York. All right. Because New York kind of led the way on some additional Airbnb bans. Now I have this article up here, Jack, because this is called Local Law 18. Now, Local Law 18 requires rental hosts to register with the city. Some of the requirements include the host to live in the dwelling, and this is the crazy thing, can only have up to 2 guests. Think about that. 2 guests, counting children, right? But not only that, guests have access to pretty much unrestricted access to all of the units. The reason this is a big deal is because this disrupts tens of thousands of Airbnbs right now, the way that they're ran. So, huge law being passed. Really, a lot of people are saying it's infringing upon the rights of these owners. Now, what happened is Airbnb sued New York. They sued New York around the end of May of 2023 to basically postpone what was going to happen. Now, recently, it was dismissed. That lawsuit was dismissed in August of this year, last month, Jack.
So they lost. They challenged and lost.
It got dismissed. They didn't even fight it.
Yeah.
I mean, they fought it, but you know what I mean? It was dismissed.
Can't fight City Hall, right?
Yeah, you can't fight. But my point is this is now case law in a sense. This is case law. This is a precedence for other metro areas to increase the banning of Airbnb. But the most important thing to understand about all of this is how much inventory is there with STRs. And one thing that I want to do is I want to start with New York, and I want to give your viewers an idea of basically how many STRs, short-term rentals, there are compared to what's actively listed on MLS.
Now,
I'm
can I
going to use
prime people
Zillow.
for a second here, Travis?
Yeah.
Folks, I want you to, what he's going to do, this was an aha moment for me this morning when Travis did this exact thing. Pay close attention to the numbers here and understand the scope of these numbers. This is huge. I'm sorry to cut you off, Travis. Go ahead.
No, you're good, man. You gave me an opportunity to drink some of that tea. My wife is going to appreciate that. Now, I'm going to use Zillow, but before I use Zillow, I want to disclose that Zillow is not the best data provider. I believe that there's a lot of data missing here. The best type of data, Jack, and we can really crunch these numbers, is having access to the MLS or multiple listing service. But just for the sake of this, I'm going to use Zillow, but I just want everyone to understand that the numbers are off on Zillow. I know that for sure. But I want to start off by looking at New York. This is New York right here. These are all the for sale properties. Now, I want everyone to notate that right now, New York has for sale 22,320 properties. Okay, again,
22,300 for sale. Okay.
That's right. Now, I also want to show rent. So let's look at rent. All I got to do is adjust this. Again, not the perfect thing, but consumers can do this as well. Now, when we look at rent, we can see right here that there's 10,934 rental units. Okay?
Now that's long-term rentals, right? We're talking about here?
Yes, those are long-term rentals. That's right. So now that we have those numbers, we can then go to a platform that's called AirDNA. All right. This is AirDNA. You have to register. It's free. This is literally a free account that I have. Okay. Now I'm going to show you, Jack, what's really, if you really want to crunch these numbers, I'm going to show you how to do that. A lot of people that are talking about the Airbnb crash get the actual unit amounts wrong. So, and this is also a new platform. They used to have it used to be different. This is how it is now. Now, the first thing that I want y'all to pay attention to is the amount of active listings on Airbnb. It's right here. It shows 43,000. Okay. So there's 43,000 active STRs, but you have to be careful with that number. In order to figure out how many are actual houses, you have to scroll down here. All right. And you have to go to listings by rental type. And you can see that of that amount of listings, 61% are the entire home. Do you see that? Okay, you can't take that top number. You take that top number, the data is going to be wrong, and we're doing the best we can. And I also want to point out that, look, this is why we say STR. We don't say Airbnb because there's also VRBO. Look at the market share. Now, most of it is Airbnb, but nevertheless, it's both of them. Now, so what we do is we take the top number, the 43,000 listings, we multiply that by 61%. And Jack, that gives us houses right now, okay, our units, 26,291 units. All right.
Wow.
Those are houses. Those are now, again, not all of those are in jeopardy. Not all of the 26,000 are in jeopardy. I would estimate probably as a result of this new law, 75%, roughly 75% of that is in jeopardy of being forced into long-term rental or being forced to sell their house, both of which would be great for the housing market, not for the owners of the STR. I'm sorry if you own one, but nevertheless, you guys saw this coming for the last 2 years, okay, or at least the last year. So in comparison, when we go back here to Zillow, okay, we can see this is for rent right now. If all of those 26,000 of the STRs converted to long-term rentals, that's an increase of 241% of the inventory.
Guys,
okay,
I gotta pause you again because folks, you must appreciate these numbers here. All right, because the price is determined at the margin. All right, if the supply doubles, the price doesn't get cut in half. All right, it's those few on the ends, that buyer who's just on the fence if he's going to buy or not, or the seller who's just on the fence. They're the ones who really move prices. Small changes in inventory and demand can have big moves on prices. We're not talking about small changes in inventory here, guys. 22,300 homes for sale in the whole city. They just banned short-term rentals, and there's more than 20,000 of them. That means inventory in New York can reasonably be expected to virtually double because of
Yeah.
this.
Do you want me to
This
really
is
blow your mind?
catastrophic for home prices in New York City. Catastrophic.
I'm so sorry. Did I interrupted you? It's
No,
the
that's
energy
all
drink.
right. I really want to drive home how important these numbers are. And I
I want
was
to blow your
blown
mind.
away by this.
I'm gonna even blow it even more, man, because when I was studying for this live, I found something else out. Now, real quick, when we compare it to the active listings to sell, right? So if the STRs were sold instead, that's an increase of inventory of 117,000. And I also want to point out that 26,000 units, that accounts for roughly 3.2% of total active listings. So if we say total active listings, Jack, right now is roughly, we'll just round it up to 800,000. If we get 26,000 units, that's 3.2% in a centralized little tiny area compared to the United States, okay? But look at this. When I change the home type, you're going to really freak out, man. If I this is for rent and I just show houses, there are only 415 houses for rent in New York,
Wow.
okay? That's it. 415, can you believe that? Now look at this. When I go over here, go ahead. When I go over here and I filter this, because you can filter some of this stuff. Where's my filters? And I want to put entire house and I only want to put houses, okay? Again, remember, there's 400 houses up for rent. Let's see how many units are houses, all right? Let's see this. Look at 3,100 houses. See that?
Whoa.
There are 3,100 houses right now that could be converted into long-term rentals. That is a times 10 come up with SFRs. We're talking about SFRs. We're not talking about the apartments, the sky rises. We're looking at SFRs. That's 10 times the rental inventory if they convert. Do you see what I'm saying here?
And guys, we're not talking about just marginal changes in inventory here. This is a tidal wave of housing supply that it's not going to hit the market tomorrow, but it's going to start hitting the market tomorrow because these zoning officers are out there and they're going to start cracking down on this stuff, guys. It's going to happen. And it's not just New York either. Now, Travis, before you go, I got to bring in a couple of our guests here. But guys, these numbers, you're talking huge changes in inventory just from short-term rentals. I keep trying to say Airbnb, but this could go down as the Airbnb bubble or the Airbnb bust, people have called it. I mean, this could be massive changes in inventory into an illiquid market. And I got to say thank you very much to Heather Y, who's back from the morning live stream. Thank you, Heather, for the super chat and the support of the channel. She says, thanks for the great answer on bonds this morning during the live stream. You're welcome, Heather. And we also owe partial thanks to Mish for that one because Mish, I saw you had a little bit of trouble getting the text in with the super chat and I wasn't able to find it in the feed, but Mish texted your question to me. And so I was able to get you an answer. So thank you, Mish, if you're listening. Mish had a family commitment today, guys. I saw a few people asking in the feed before. Mish couldn't be with us today because of a family commitment, but he is with us in spirit. And Travis has very graciously and very timely stepped in to fill that gap and done a fantastic job. Thanks again, Heather. I appreciate the super chat and the support and the kind words. And Dan Hadeen says, uranium go burr today. Is that what uranium does? Is J-Pal printing uranium? I didn't think the Fed could print yellow cake. But yeah, uranium is doing really well. Guys, there's like a couple weeks now. It's a blind spot for the channel, uranium. I know I'm going to fill that hole. I am going to get a uranium guest on this channel. I promise you. It's in the works. And after watching that move today, I sure wish I had sooner. But thanks, Dan Hadeen. Dan Hadeen is actually the one who pointed that out to me in a Twitter DM today. So thank you, Dan, for the intel and the support of the channel as well. And thank you, Manuel Barrera, NSF and REMS or NSF and REMS. I think that's our initials here, brother. He says, thanks for all you do. Awesome shirt, by the way, Travis. Sharkathon.
Oh my gosh, yeah, I'm going to Sharkathon in about 2 weeks. Sharkathon, it's a huge event in Texas. That's funny.
I don't know if you guys knew this about Travis or not, but he is a very accomplished shark fisherman. He sent me a couple of images of some real monsters that he has dragged out of the surf there in Texas. So one of these days,
not
we're
killing
going
them,
fishing, brother.
I'm not killing them. It's important.
Catch and release, always.
Yes.
Yep, always catch and release. Absolutely. Hey, if you're gonna eat them, no, you know it's part of the food chain, but there's a lot of guys out there who just catch something and kill it and then chuck it back in the water. That's not how we roll. Catch and release always. Good clarification. Thank you. And thank you very much, Manuel Barrera, for the super chat and the support of the channel. And Steve is in the house. What's going on, Steve? Thank you, brother. He says, my son rents his condo on Airbnb. He has 4 cancellations in October. Yikes. I wonder if he's going to be able to fill those up. That's very high. Now has to lower his price to attract guests. Demand is dropping. That is exactly what's happening, Steve. And I think you're going to see that anecdote across the whole spectrum right now. And there's something else that, Travis, I meant to bring this up on the live this morning and it slipped my mind. Airlines have recently announced that they are lowering their earnings expectations because of the higher fuel prices and because of the new contracts and the labor disputes for the pilots. So what the airlines are saying is our costs went up and we are unable to pass those costs on to the consumer because we don't have pricing power. If the airlines raise fares, people won't fly. They're telling us that one by one last week, every airline in the country virtually did this, which means Airbnbs, if people aren't flying, they're not staying at Airbnbs either. So that's another indicator that this STR crisis could be reaching a fever pitch very time soon. Thank you, Steve, for that anecdote, and my best wishes to your son, and good luck with that condo. He's got a rough patch ahead. Good luck, all you Airbnb owners. Guys, let us know in the comments if you've got an Airbnb. Are you seeing something similar to what Steve Woitis' son is seeing? Let us know in the comments. All right, Travis, we were talking about New York.
Yes. Okay.
What else you got for us, brother?
So what I'm trying to do also, Jack, is show your viewers very, very simply, as quickly as possible, the evolution of the banning. So we also, like you were just mentioning in that comment, we have other factors that's weighing on STRs. I almost said Airbnb, STRs as well, like the vacancy rate, the cancellations. But again, to me, the immediate holy smokes thing is well, first of all, understand how much inventory is there, but the banning. Now, there's an evolution going on. One of the metros, now that New York has done their thing, Jack, the leading metro right now is now, in my opinion anyways, is Dallas. Now, Dallas straight up banned Airbnb, pretty much gutted them, cut their legs off by restricting any Airbnbs or STRs to be ran in a residential zone. So genius, right? They're like, fine, we don't want to infringe on your rights, but we're just going to cut your legs off and say you can go ahead and do wherever you want, but you can't do it in residential neighborhoods. Dallas just did that, brother.
So
that
not a registration requirement, just an outright can't do that.
You can't do it.
Wow.
But here's the important thing. Now, why hasn't it shown in Dallas yet? I think it was June. I think this was passed in June. I forgot to write down the date. Shame on me, darn it. This was passed in June. But what I want people to understand, the reason why we haven't seen this massive increase yet in Dallas is there's a 6-month grace period. Okay? So again, it says right here, we'll begin enforcing the new zoning in 6 months. That means when we start January of 2024, there's going to be a whole bunch of stuff going on, especially in places like Dallas, that are going to start enforcing the restrictions for Airbnb. This is a huge, huge deal because it guts the entire rental market, the STR rental market. Now, this is what I want to show you, Jack. I want to try to blow your mind here. Let's go back to Zillow, and I'm going to show you just how much inventory Dallas has, because remember, this is just simply put supply and demand. Okay, we're just going to say it's a supply and demand because, Travis, where's the inventory going to come from? Where's the forced selling going to come from? So let's continue to tell the story. I'm going to show it, you guys, Dallas. All right. So first we're going to go to Zillow, who we know we can't trust. We need MLS data. Just want everyone to know that this is tainted data. Okay. Let's see here. Okay. So let me change this and select all these again. I forgot to select that again. Now, here's Dallas right here, Jack. We can see that in Dallas right now, as far as rentals, there's 2,043 rentals in Dallas, according to Zillow. Okay, see that?
2,043 rentals. These are LTRs in the whole city of Dallas.
Yes, sir. Those are not short-term rentals. Those are long-term rentals. Now, when we change this to sold, okay, let me apply this. We now see that there's 2,783 homes to be sold. All right?
Okay.
Now, when we go back over to AirDNA, again, everyone could come here. You just come back to the search here. You just type in Dallas. Oops, I typed Dallas in somewhere else. I'm not sure where I typed that in. We type in Dallas. We hit select. And remember, I got to change this back to view all, view all. And you can really filter this if you really want to crunch these numbers. But again, the best way to do that is MLS. Now, When we go to Dallas, we see right off the bat, we go to market performance, we see right off the bat that there's 10,100 units. But remember, we want to filter this data out as much as possible. We don't want to just like, oh my God, 10,100 units, that's so much. We want to go down to the listing type, okay? And we see entire home right here. 89% of these listings are entire homes. A lot more share of both Airbnb and VRBO right here. Very interesting. Okay, so when we multiply the 10,100 active listings by the 89%, that gives us, Jack, almost 9,000 listings. Okay, so almost 9,000 listings, which again, when we look at the total active units in the whole United States, that's over 1% of active listings. We're only talking about STRs.
Just Dallas.
We're only talking about Dallas and only STRs.
Wow.
That's all we're talking about. Okay, but look, again, going back here, when we just look at the for sale, if all of those STRs were sold, that's an increase of inventory like this of 325%. When we go and look again at the rental market, switch back to the rental market, you guys could play with this filters. It's really, really amazing. We get an increase. If all of those STRs convert to long-term rentals, we have an increase in Dallas of 440%. Jack, those STRs are illegal. They're illegal. They have to go.
So any of my realtors, I know we got some realtors that follow us here on this channel. Let me know in the comments. Give me your best guess based on the comps in your area and what you see in your market. If the number of homes for sale in your area were to triple, what would the effect on the prices be? I shudder to think of what that might be. Guys, this is unbelievable. I mean, look at the numbers in Dallas that this is worse than New York because Dallas had an outright ban, not just a registration requirement. The number of STRs that are single family homes, the whole home is for sale, 9,000, is twice the size of the long-term rental and the existing homes for sale combined.
That's
Whoa.
right. That's right. So this is a black swan.
This blew me away this morning when I saw this. I knew this was a problem. I had no idea the scope of it. No idea.
It's amazing. So when we keep looking at this, because we see this spreading. So I get the recession, I get the unemployment becoming unhinged in the future. But what's going on right now, Jack, is the banning. They're banning. So when we go to Las Vegas, now Las Vegas is already banned roughly 75%. It's a complicated law. I'm not even going to throw it up. But essentially 75% of the Airbnbs in Las Vegas are in harm's way.
That's Las Vegas, which will be hosting the Silver Symposium next week.
You better not be going to Airbnb, brother. Better not go there. But the crazy thing is Las Vegas has already started enforcing. Because it's the law, maybe a challenge in court, and then enforcement. You got to get to the enforcement. Now, when we look again at Las Vegas, when we look at the rental market, you're going to freak out when we look at Las Vegas, because remember, they've banned it. So Las Vegas has banned this. Look at the rental market in Las Vegas, Jack. It's sitting at 3,278 units being rented. When we look at the for sale market, okay, switch here. Any one of the viewers can do this themselves. Okay, Zillow is not perfect. Sold. Okay, whoops. For sale. I like how you can look at sold data. I want to look at that later. Now, for sale, it actually went down. That's interesting. Is 4,405 units. Okay. So basically, we have 3,200 rented, 4,400 to be sold. Now we go back to AirDNA. We drop this down. We're going to go to Las Vegas. We'll end in Phoenix. Whoops.
By the way, that's a lot of homes for sale in Vegas. I don't know the size of Vegas versus Dallas, but twice as many homes for sale in Vegas as in Dallas. That's interesting.
Yeah. I mean, and they got what, 44. So they got 4,400 homes for sale, yet total active listings on AirDNA, 19,600. Jack, do you hear what I'm saying here, man? But remember, let's get the real data. Let's scroll down. Let's calm our emotions. Like, oh my God, right? 74% are entire homes. See? 74% are entire homes. So when we multiply that 19,600 by the 74%, we know we have 14,500 SFR, entire house units. Okay. Wow. Again, probably roughly 75% of that is going to have to convert. Now, when we compare that to the houses for rent, Jack, okay, that's an increase of inventory just when we compare for sale of 300%. and 28%. Okay. When we just look at the for rent market in Zillow, let me show you once again for rent. When we look at just the rental market, that is a 443% increase of inventory. So we're staying in this little tiny box. We're just talking about STRs.
I mean, guys, these increases in inventory, and there's never been anything like this, so nobody knows how long this is going to take or what it's going to look like, because we've never had anything like this happen. But it's a good bet that all these STRs, they're not all going to become LTRs. They're not all going to become homes for sale, but they're going to become something. And we're not talking about modest rises in inventory here, guys. We are talking about a deluge. And even if it's spread evenly across the short term and the long term rent, or evenly across the long term rentals and homes for sale, we are still talking about massive decreases in asking rents, massive declines in the values of homes for sale. This is the housing bubble waiting to happen. And it's being legislated right now by municipal governments in all these major metro areas. This is huge.
It's spreading. And I wanted to end, Jack, on Phoenix. I know you requested Phoenix. Now, when I first looked at Phoenix and the STRs, remember STRs, this isn't that, but I was blown away because I was like, there's not going to be that many STRs in Phoenix. It's the middle of the desert. These are only for, vacation rentals. But I'm going to get there in a minute. Let's start by saying what's on Zillow. So right now in Phoenix, there are for rent, this went up a little bit, but it was 3,300. Okay, so there's about 3,300 homes for rent right now in Zillow. Okay, in Phoenix on Zillow. Let me go to for sale. So we're going to units for sale in Phoenix on Zillow. We're sitting at, it's actually less, which is interesting. Think of the you know why it's less, Jack? Because people can't even afford. It doesn't even make sense to buy a house. I mean, anyway, it drives me crazy. But there's for sale in Phoenix, 2,700 only in 88 homes. Okay, for sale right now. Okay, so 3,000 and then almost 3,000 for sale. Let's go to Air DNA. And remember, this is free. I really challenge everyone to really please empower yourselves. Check out your local area, metro area, see what's going on, see how many STR units are there. But we're going to start at a gross listing of 11,800 STRs in Phoenix. Why Phoenix?
Well, Phoenix, I can tell you, that's the big, the new Silicon Valley, as the urban doom loop in San Francisco and the blight in that city has driven business and people out. Phoenix has been one of the primary beneficiaries. A lot of tech companies setting up there. So it's seen a lot of growth in these last few years as California has just gone off the deep end crazy.
I think they're gambling on that chip plant as well. Can't be sure, because I went to anyways. I want to talk about so many other things. It's so hard to keep myself in the box right now. But again, when we go scroll down listing by rental type, we can see that 87% of those listings are entire homes. Again, when we multiply the 11,800 by 87%, we get total amount of listings of 10,266 listings. When we compare that to what's actively being sold in Phoenix, that would be an increase, and obviously it will be split up, and obviously they haven't banned it yet, but that would be an increase, Jack, of 369% of inventory increase. Okay, when we compare it to the rental market, let's apply this, that would be a 307% increase of inventory. And here's where I wanted to really conclude on all of this. All right, okay, so if we look just at active listings, 800,000 active listings. It's a little less than that, depending on the data source, but 800,000 active listings. And just those 4 metro areas, Jack, just those 4 metro areas, that would account for 7.4% of active listings right now.
In the whole country.
In the entire United States. And all we're looking at are 4 metro areas. And what I'm really trying to say here and really trying to spell out is this could be huge inventory bombs. And this is just one data set that we can look at where we get inventory and for selling. And Jack, this is before unemployment. This is before recession. I don't know what else to say. People should be cautious. And that's all I got for you, brother.
Now, we touched on Phoenix there, and I requested Phoenix because Phoenix is one of the boom towns, right? It's one of the cities that's seen the most sudden and dramatic growth. I had a buddy who lived out in that area too, and he said it was very up and coming. A lot of young techie types moving into town, bringing their money with them, bringing their California pricing with them. So they've driven up values pretty substantially out there. Do you know, does Phoenix have a ban or a registration requirement or anything like that?
I think that they're working towards it.
Okay,
This
so it
stuff
hasn't been actually implemented yet. Maybe, I did a quick search while you were talking there. It
Okay.
seems like there are some regulations, but
Right.
I couldn't find an outright ban. So it's not like Phoenix is going to dump all that stuff on the market. But guys, the gist of this is the bans and the regulations, they're coming to one extent or another in virtually every metro area. And I've even seen some of the comments here. I'm seeing some of that is coming out in the comments. I tend to be on the libertarian individual, get the government the heck out of my life kind of thing, right? But I also have a family and I have kids in a house in a nice neighborhood. And I'm just imagining here, and I'm struggling with this internally. So I just want to challenge the thinking here. There's a lot of people saying the government has no right to do this. They're infringing on the rights of the individual. Totally well thought out. You're right. And I am inclined to agree with that. But at the same time, if some dirtbag were to buy the house next to me where I'm raising my daughters, and now all of a sudden it turns into a party house where on a Wednesday on a freaking school night, I've got 320 somethings blasting music, breaking beer bottles out in front in the driveway while my kids are trying to sleep. Heck no. That's not going to end well for anybody. So this isn't such a cut and dry issue. There's the libertarian in me wants to say government can't do anything, and then there's the dad in me who's saying go ahead and try that in my neighborhood and see what happens. So it's let me know in the comments, guys. Is there a gray area here? Is there a way to balance this without banning it outright? Because I know people have investments and people have business in it, but I also know that people's lives have been thrown out of whack by Airbnbs and party houses popping up next to them in their street in what was otherwise a nice place to raise a family, and now they're living in a hellhole because of it. So, I would just say resist the urge to just like blah with your own biases right out in front, because this is one of those cases where you've got two people's civil rights are being infringed upon in the same situation, and you can't rule on one without violating the other. And I'm not so sure this is really a cut and dry issue. So I can empathize with both sides here, but that's besides the fact that this is happening in a lot of towns, a lot of cities. Some are just outright banning, some aren't, but a lot are. The big ones are. And these are not small numbers, guys. These are massive spikes in inventory that are coming. And Travis, you just mentioned there, hey, this is forget unemployment, forget people losing their jobs and maybe losing their houses, which I think most people are in agreement that we're heading towards that. This is happening whether people lose jobs or not. This could be what triggers the event. And that's why I put the black swan in there in the thumbnail today, because I knew this was out there. I knew it was a thing. I've read about it and I've heard about it, and it made sense. But the numbers hit me like a ton of bricks on that live stream this morning, Travis. And thank you so much for stepping up to bring this to us today, guys. You got to follow Travis's channel, Real Estate Mindset, because like I told you, man, he brings receipts. This Air DNA stuff and the way he filters this data and processes it and presents it, you get that every day on his channel. He does a fantastic job. And Travis, we're so lucky to have you with us today. Thank you for doing that. I really do appreciate that. There is a link down below in the description to his channel. And what do you think, Travis? Give me your best guess. I'm not going to hold you to it or anything, or come back 6 months and say, aha, you were wrong. How long does this take? How long before the zoning guys shove this inventory into the market by enforcing these laws?
Well, how long does it? So if we just look at Dallas, we know Dallas is going to start enforcement in January. We know that unemployment's going up. We know that we may even be in recession. I mean, there's just, it's hard to say that because Jack, you have to understand, it's so hard for me, brother, because I limited myself in what I was talking. I wanted to talk about the net sellers, institutional investors. I really wanted to talk about all the hidden inventory for new construction. I want to talk about the health of the consumer and the long-term rental market. But all we did is talk. I don't know. I will tell you that 2024 is probably going to be real ugly for Airbnb, because we have to understand that the little guys are paying attention to what the big guys are doing. They see what Dallas is doing. They see what Las Vegas did. They see what New York is doing. The more cities that incorporate some of this case law, this new precedent, because this is brand new, the more that we'll get our housing market back. And I understand your argument and the infringing on property rights, and I don't like it. And I think the bigger problem is institutional investing. I'm going to say it right now. The bigger problem, in my opinion, is institutional investors purchasing SFRs. They're now net sellers, by the way. We talked about that. But
Yep.
nevertheless, Jack, I still, in my personal opinion, I believe the STRs in residential neighborhoods where it's far from the ocean, it's far from tourist destination, I think it's an absolute travesty to America. I feel like that's actually infringing upon my rights as a homeowner, that I have a right to raise my children and live in peace. If my neighbor parties, I can complain. But with an STR, it's like a hotel. I don't want my kids to grow up next to that. So I do have empathy, but I think it's nasty. I think it's dirty. I think it's ugly. People don't want that in their neighborhoods. And again, my heart goes out to those people. The bigger issue is the institutional investors, but nevertheless, I think it needs to be definitely re-regulated. And honestly, one of the things that paved the way for New York was when they tracked the complaints, I think over a 3-year period, they got 10,000 complaints. So it's not like we're saying that we're just infringing upon rights. There's a reason. There's higher crime. There are more people calling the police. That's a waste of money. It's an issue. It's a huge issue, and it's unfortunate. But I'm on that camp, Jack. And I think it's happening right away. And if I was an STR owner in Dallas, I'd be freaking proactive right now. I'm not going to try to list my house in the winter months. I'm not going to list my house in January when they start enforcing it. I'm going to do it right now because everyone should know by now that January, the fall and the winter months in real estate, is dark. It's dark. Yep. So can they blame themselves? I mean, who do they have to blame at this point? They see this coming. There's bans all over the place. Hopefully they can convert to long-term. Maybe they can cash out, but I fear that a lot of those are set up on those DCLR loans, which basically means that there's going to be a percentage of those owners, not all of them, but there will be a percentage of those owners who cannot afford to convert to long-term rentals because the profit margin and the cash flow for these STRs, Jack, it could be 40, 50, 60% higher. It's so crazy to me. 60% higher than the long-term rental with a 50% vacancy rate.
Yeah. And these, I can't help but think of these guys, these bros talking about the number of units, the number of doors that I own 500 doors, 500 units, right? Yeah. And I bought them all in the last 3 years. Okay. So you just told me you owe more money than any man could possibly repay in 10 lifetimes and you're bragging about it. Okay. Good luck with that, because those are the guys who are going to be wiped out in this. If you bought one, leveraged it to buy another, leveraged that to buy another, leveraged that to buy another, congratulations, you are going to get foreclosed on all of them, one after another. And the airline's slowing down. That means the travel is slowing down. The bans means your cash flow is cut off, and you've still got payments to make on all that stuff. And guess what, guys? There's also banks holding the notes on these things, aren't there? So if these bros with their 500 units don't make their payments, that means the banks need to start foreclosing. Well, that's expensive, and that means the banks start taking hits. So this crisis could go from, just a local real estate thing suppressing the comps to a financial crisis very fast. And hey, get in line, because we've already got credit card debt, and we've already got commercial real estate, and we've already got losses from U.S. Treasuries. Take a number on your financial crisis that's waiting in the wings here, guys. Any one of these things could set off the whole thing. So I got one more thank you I got to say, or a few more thank yous. Mr. Zarkos, thank you, sir, very much. A red one. I appreciate that very much. Thank you for the generosity, Zarkos. Is that red or is it pink?
That's Pepto-Bismol.
It's Pepto. Thank you. It coats the stomach. Yeah, I love those commercials. He says, thanks for your efforts to produce day after day great content. For you and team to have a beer on me. Well, thank you, Zarkos. We will have a beer in Vegas, beautiful Las Vegas at Caesar's Palace at the Silver Symposium next week. And I really do appreciate that. And thank you, guys. It is a lot of effort to produce this content. You've got editing time and research time and gathering your thoughts and all the technical stuff that goes in. So I appreciate that, the acknowledgement of that, Zarkos. And let me just tell you, it is my pleasure. I love this job. I can't wait to do this forever and ever. And Travis, I'm sure you feel the same way. I know you like doing the tubes as well. By the way, you guys on Twitter, Let us know on Twitter. We got to get Travis on Twitter. X. I'm sorry, Elon. X. Travis is not on X yet. He's got to get on X because you just need to, Travis. That's one of these days. YouTube is going to crack down and ban all the finance people who don't tell you anything other than our banks are strong and resilient and well capitalized. When that happens, you better have a backup plan. X is the place to be. No censorship over there. And thanks again, Zarkos. I appreciate that. Thanks, Dan Starr. He says, how are Airbnbs financed like commercial real estate or a mortgage? Travis, you want to take that one? What do you think most Airbnbs are financed with?
I mean, I would honestly say that most Airbnbs are on a conventional mortgage. I would say the recent ones. There's a handful with those DCLR loans with a higher payment. They can only cash flow with Airbnb. But I would say that most of them are conventional. And if they did it legit, right, if they said this is going to be an Airbnb, this is an investment, conventional requires 20% down for non-owner occupied. You get a better rate with 25. Now that's conventional. If you go non-QM, if you do stuff or non-qualified mortgage and you do hard money and you do commercial, it's probably more like a 25% down payment. So if depending on the type of financing, it's not hard. You just really have to qualify based. The hard thing to do when qualifying for investment properties for conventional mortgages, residential conventional mortgages, is debt to income ratio. If commercial, it's about cash flow. Completely different world in commercial. So commercial, as long as you get cash flow and you got your 25% to 30% down, here you go. They don't care. Although they're tightening up big time in commercial right now.
Now, I heard you mention DCLR twice. Could you elaborate a little bit on what a DCLR loan is?
So I want to get more information on that to break down for you. So I don't want to talk too much about it, but basically it allows someone to use future income to qualify for the loan. Okay. Which, that's great, right? Let's just do the. But again, when we look at the higher interest rates and the higher expense to the homeowner for getting that type of loan, it's unfavorable financing. So some of those loans, Jack, those DCLR loans may already have 8%, 9%. I do want to get more data on that. Right now I'm looking, again, there's just so much to cover, man. I honestly think that a huge black swan in Catalyst, I mean, I really feel like it's going to be new construction as well. I don't think people understand how much new construction is not being reported right now on MLS.
So DCLR stands for, let's see. I see a couple of different ones here. This is a DSCR. Basically, I'm seeing the same thing. Basically, you're collateralized by future cash flow, which if you're paying attention to this presentation, what future cash flow? That's the problem. There is no future cash flow for these properties because the market has just been taken away by the municipal governments in a lot of these markets. Thank you for that. Thank you, Dan Starr. You sound like you were going to add to something there, Travis.
Yeah, it's a debt service coverage ratio.
Okay.
But I want to know the
coverage ratio. Okay. So go ahead.
Well, the important thing, and this is why I get so frustrated talking about it, I want to know the actual amount, right? Because we can all just raise our voice and talk. But like you said, when we bring the receipts to the table, the food is just different meal we're serving. We're not serving fast food. We're trying to just a 5-course meal here.
Yeah. And that's the thing. And I think that separates both of us. If I might self-promote a little bit here, I do think that separates your and my channel from a lot of other channels. There are some channels that just fire from the hip. Here's a story and here's my opinion on it. And that works for a lot of other channels. We try to go a little deeper here. We try to go 2-3 layers deep in the data, like what you did with the Air DNA and how you filtered out, okay, this guy just rents his spare bedroom. This wasn't going to wipe him out, but this guy rents the entire house. You put a lot of thought and a lot of nuance into your analysis of the data instead of just spouting off on a headline. And I think you do an excellent job on your channel of doing that. Again, guys, you should be following Travis's channel. One of the best out there when it comes to actually getting down into the numbers and behind the numbers and what they're actually telling you. He does an awesome job at that. And thank you, Harmon Air LLC. He says, appreciate all the work to reveal this smoking gun. I think many people will be caught off guard in the end, unfortunately. Mind blown. I tell you, Harmon Air, that was exactly my reaction this morning. If you go back to Travis's live stream from this morning on his channel, you'll see me when he gives us those Dallas numbers. My eyes just like I was about to be hit by a train. Oh my God. And right there, I was like, I need this on the live stream this afternoon. We have got to go right on the air with this one. And thank you, Travis, for stepping up on short notice, especially to fill in for Mish. Really appreciate you doing that, brother.
course, man. I appreciate you, brother.
Yeah. And thank you, Harmon Air LLC. Appreciate the super chat and the support of the channel. And I share the sentiment. Guys, the market is closed. We're going to do a quick trip. Let's see. How did we close? Oh, no. 3 days in a row, closing at the low of the day. Oh, that's a bad sign for next week.
Your sign, your screen.
Oh, okay. We got to share my thank you. Yeah, you could.
I got you.
Look at
See,
that.
I got you. Oh, hey, I'm going to give Mitch a run for his money.
Check it out. Closing just barely off the lows of the day. That little green candle at the end there. The S&P closed down 10 points, 4,319, down 0.25%. The Dow did the same thing, down 106 points at the close, or 0.31%. Oh, that is bad, guys. That dead cat, that is a dead, smelly, rotting carcass of a cat. It did not bounce very hard, and it landed underground, down 106 points on the Dow, and the NASDAQ did the same thing. All of them negative on the day, 13,211 on the NASDAQ, down 12 points. Not a huge down day, but remember, guys, this was the bounce today because we had 2 really big down days. This was the day we were supposed to open strong and stay strong. Nope. That rally faded across the whole day. That's what I was afraid of this morning when the opening bell rang. That's exactly what happened. Bad sign for next week, guys. 3 consecutive days closing on the low of the day following a Fed meeting. Jerome Powell just took a backhand right across the cheek to this market. And, I still think the market has not quite fully appreciated what Jay Powell did this week, guys, because the CME futures are still showing that they're not believing in that November rate hike. And I think it's coming. I think that November rate hike is pretty much a sure thing, unless the Airbnb bust happens tomorrow. Maybe it does. But Travis, I'm going to give you the last word, brother. You got anything you want to chime in there?
Yeah, I'm just going to say that we tread lightly, tread lightly, keep watching the data. Don't be suckered or, I guess this is what I want to say, Jack, is, don't be pressured into purchasing one of the biggest transactions of your life, which is your home, which is also where you would generally raise your children, have a family and things like that. And understand that right now what's going on in the economy, not only, there's so much going on right now. I think there's a precedence for us to be patient, risk off, save our money, save our liquid, credit income assets. But the biggest thing of all, just stay aware and understand why people are saying what they're saying. When you go to realtor channels or when they're on the news, CNBC or wherever, the reason they're saying the things that they're saying, Jack, is because they're paid to, not because it's the truth. They're paid to say crash bros. They're paid to do that. They don't have the luxury they don't have our luxury where we get to be honest. And that's why, I feel so blessed to be part of the YouTube community, because the legacy in my eyes, it's not any type of cloud. Our legacy is making teachers and teaching people. And it's just, it's really amazing. And I hope that this helped people understand that they need to pump the brakes. If they're all stressed out, if they're fed up, okay, they're fed up, just chill out. Let the Fed do their job. Let the smoke clear. Stay patient. Stay patient.
And I throw it up on the screen. No FOMO. I know there's a lot of you guys that have watched home values just continue to rise, and you've thought, I'm never going to own a home. I better just buy now. I'll take that big mortgage. No FOMO. Take it from a guy who FOMO'd in 2006. No FOMO, guys. Wait for your market. Fight on your terms, on your ground. This market will give you the battlefield of your choosing if you're patient. Read Master Sun. Do anything but run out and buy a home right now, please. No FOMO. And again, Travis, thank you so much, brother, for bringing the receipts today. Awesome presentation, mind-blowing stuff. Guys, the short-term rentals just may be the black swan that brings that supply into the market. Travis gave you the raw numbers. Thanks again to Real Estate Mindset for coming in today, guys. Thank you to everybody, my Patreon supporters, for supporting the channel. Links down below should you feel so inclined. Thank you, everybody, for the super chats and your support. Hi, Mom. Hi, Dad. I love you guys. Have an awesome weekend, everybody. Hard times are coming, but they're not quite here yet, so make the most of this time. And until next time, live small and dream big.